connection is not working properly from my end. So if there is a disconnect from my end in the middle, please send a WhatsApp message or something. Notify me that I'm not audible. Okay.
Okay, sir.
Okay. So in the last class we were done with SA 500. Let's start with SA 501. It's the same standard but a little extension which deals with three specific aspects. One is inventory. One is legal claims, and then the other is segment reporting. These are the three things that it deals with: inventory, legal claims, and segment reporting. What is inventory? Inventory, we all know it is the major operational requirement of most of the companies in the world. Legal cases, anyways, it's a natural thing for most of the companies. It's something that comes along with the business. It's something that most of the companies cannot avoid. The legal may be a small case, or the litigation may be a small one or a big one. It generally happens and is common business procedure with almost everyone. Next is segment reporting. Segment reporting is basically how to classify a particular unit as a segment, whether it should be included in the report or not. Now, if you take something like Nestle, Nestle has so many products under them. Maggie is one of the products, Kit Kat is one of the products. These are just small examples. Okay. So, based on the individual brand, for Nestle, each and every single one of them becomes a segment because their revenue is significant to the total revenue earned by them. How to classify individual unit as a segment, that you will learn in accounting standards. But with respect to that, what are the things that an auditor should do is what we are going to learn in this standard. So here, please look at the heading. It says specific considerations. It is very particular that they are only describing specific considerations. What to do, how to obtain the audit evidence, the regular test of controls, test of details, and substantive audit procedures. That is regular thing that you anyways do as an outcome of SA 500. But here only three items have been selected and they are specifically giving you some guidelines. First, inventory. Inventory by default, we all do the check with respect to the numbers in the financial statements. அங்க வந்து ஒரு 1,02,000 இருக்கு. Then you will see the physical verification report and you will say, okay, this is the number, and you'll move ahead. But this standard specifically puts emphasis on inventory because that is the lifeline of an organization. It is the one that is bringing the bread and butter for that organization. So we need to ensure that the inventory is actually existing, and also the existing inventory must be in condition. These two things are very important. Existence, if you take up very big stores, large scale stores or FMCGs, their inventory verification is not so easy. Their carrying out the inventory verification is not so easy. But once you start the inventory verification, they have to stop the sales also, some places, because the movement is so fast that if you don't stop, there is always going to be difference with respect to the inventory. Okay. So in order to avoid this, they sometimes have inventory verification on off days or nights. Even I went at nights to conduct inventory verification. It was a very big assignment, and we spent almost 1-2 months working in the nights All those 2 months we were working like BPO employees. Morning we did not go to office, but night we had to go to the client place and count the inventory. So first thing with respect to inventory, if you remember the assertions also when it comes to assets or the balance sheet items, existence is something that is one of the first assertion that we need to consider. The physical existence of the asset is very important to the entity because it is the lifeline. And also its condition, its existence is okay, but along with it, the condition of that asset needs to be assessed. Here, okay, last year there was an entity where we went and were conducting an audit. During the entire time, there was one trolley which was placed. One truck was there at the one corner. So we were observing that the truck was there, okay, and we didn't say anything initially. But towards the end of the audit, in spite of the time gap being 2-3 weeks, after 2-3 weeks also the truck is still there. So we casually asked some people, what truck is that? Why is that truck over there? Then suddenly people started getting alert. What we asked to an office employee reached up all the way up to the general manager and the CEO. So then we thought this is something we need to we need to dig into, and we had approached the GM directly and asked him what is it exactly. So then he said that this is an asset which we purchased, but we are not able to use it because it is not matching our specifications or these local industry standards here. So what has happened basically is that they have purchased an asset which does not match the requirements of the company. So, who has failed? At the very procurement time itself, they have failed to take do proper analysis and all that stuff. They have wasted a huge amount of money on that asset, and it is just lying. They're not able to sell it to any other outsider also because in the whole country it is not applicable because of some legal regulations. So they just bought an asset from all the way from Italy and they are not able to use it. So these are the things that happen when it comes to existence and condition. You actually need to check what is the reality behind it. Okay. So some general procedures that they are prescribing is when inventory is material to the financial statements, the auditor shall obtain sufficient appropriate audit evidence. When inventory is material to the financial statements, the auditor shall obtain sufficient appropriate audit evidence. We have to obtain evidence regarding the existence and condition by doing these following activities. That's what they are saying. You have to obtain the sufficient appropriate audit evidence by carrying out these extra activities. What are they? First, attendance at physical inventory counting. This word I would like to highlight to all of you. It says attendance at physical inventory counting. It does not say auditor has to count. It says the auditor has to be there at the inventory counting. We are supposed to be standing there and observing. We are not supposed to actually carry out the audit. Unfortunately, all the chartered accountants out there, they are very much falling for the money and they will push the article students into the inventory counting process. But in reality, attendance is all that is requested of us because as an auditor, if you are going to report on that number, it is not you who has to do it. When they are counting, please understand me carefully. When the client is doing the counting, you need to be physically present and ensure that they are counting properly and make your own notes. That's all. You are not supposed to do the physical verification. So this standard is making it very clear. It is only the attendance that is requested of you. So they are saying attendance at physical inventory counting. Since this is inventory, during the physical verification, go be there. Be there at the place where the counting is happen. Unless impracticable. I I still remember my friend went to Kerala, one of my colleague only. So he went to Kerala and it was I think a flood, rain time or flood time. Something happened, and naturally Kerala there is lot of rain. So this guy was behaving like a hero, and he was like, "Let's go, sir. We'll do it." He was putting on the umbrella, all the raincoat stuff, everything. They went into the thing. And after going there, they started counting the pipes. Okay. And when they started counting the pipes, one extra pipe has come. And they were like, no, this is not practical. The extra pipe cannot be there. We have sold it. Abdina, the general manager was saying. So this guy was like, no, 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 I've seen the pipe. Then these people went back and one of the guys pulled out the pipe. It is actually a snake. So this guy literally fainted there in front of in on the inventory place. So these are these things that make it impracticable. Sometimes it is not practical to go do the inventory verification because of the floods or because of some natural risks that are there. Because of some areas like Neyveli Lignite Corporation and all, if you talk about inventory, the lignite is the inventory for them. And when lignite is almost stored like in heaps and tons. So in those cases, what will you do? Will you go take a measuring tape and say, yeah, this is the area that I'm going to measure up in? You cannot go take a inventory tape also. You cannot go do a payment also because that extraction comes out in huge quantities. So sometimes it's not practical. For some set of inventories, it is not practical. So you just have to rely on their numbers, or in those cases, what happens is a surveyor comes, a quantity surveyor. Someone like a quantity surveyor will come. So some external party will come and then they will say that this is boss, this is the quantity the company has. Okay. So these are the things that can happen with inventory counting. Sometimes it is not practical also. So if it is not practical, the standard is not suggesting this. But if it is practical, then be there at the physical verification. Attendance is important. So while being at the physical verification, what are the things that a auditor must do? First, evaluate management instructions and procedures for recording and controlling the results. Procedures for recording and controlling the results of the entity's physical inventory counting. That means what is exactly required of you, Abdina, if you are being present there, if you are attending that physical inventory counting, you get to see how they are doing the inventory counting. Believe me, inventory counting was also taken on sample basis by many entities. Okay, because sometimes it requires the entire staff to be involved. Pharma sector and all, if you take the warehouses, they'll be huge. It will be so freaking huge. It is just not possible to do it all in one day. Sometimes they shut down the business for 2 3 days during the year end or month end just to complete this inventory verification. The pharma companies have a very big struggle. Okay, pharma, FMCG, where there is lot of inventory, but everything moves very fast. Okay, those places it becomes a little difficult to do this physical verification. So in those cases, or in all other cases where attendance is practical, go there, and this is what is expected of you. Since you are attending it, you stand there and watch what people are doing, what are the procedures that they are doing for recording and noting down all the physical verification, counting, how are they reconciling. That is what you need to do. You need to evaluate. That is what is required of you. Evaluate the management instructions and procedures for recording and controlling the results of the inventory entities physical inventory counting. What exactly are they doing? How are they counting? How are they noting? How are they reporting? This is what needs to be tested and assessed by you. Next, they are saying observe. Same thing. Observe also the counting procedures. The counting procedures is what is most important. How are they counting that? On sample basis, or are they taking a full-fledged counting? Are they doing from book to floor or floor to book? On a sample basis means in the steel industry, what happens is when you have so many pipes, what they have to do is they will take count of the number of rods of different sizes. So they will just take the count of rods of various sizes. Let's say it is 12 mm, 18 mm, 16 mm. The rod sizes are there, okay? All the way till 40 mm, it 44 mm வரைக்கும் இருக்கும். It all starts with 8 mm. This is the lowest size and goes up to 44 mm rods. These 44 mm rods will be very thick. Now, here they will just do the count. They will just do the counting and convert the count into weight. So then they will report for tonnage. So what exactly they are doing is they will take a physical counting of the rods. Then they will, based on the size, they will convert the count into a particular amount of size. That is, they will report it in tons. So you cannot definitely give a number saying I have 27 rods. In steel industry, you need to report in a tonnage manner. So the 27 rods will convert into tonnage based on the weight applicable for that particular rod. Each rod will have a different weight. 8 mm will have a different weight, 12 mm will have a different weight, 16 mm will have a different weight. Similarly, all the sizes leading up to 44 will have different weights. So these weights needs to be taken into consideration, and then and then the weight needs to be obtained. So these things, when you are doing the counting procedures and then recording and controlling, this is what you need to check. How are they taking the sample? Is it book to floor or floor to book? If they are using any conversion methods, what are the conversion methods that they are using? That is what is expected of you. Since you are not the one who is doing the verification, all these are practically possible. If you are the one who is doing the verification, then there's no, then the whole point of independence is gone over there. Okay. What is book to floor? What is floor to book? அப்படின்னா book to floor என்றது வந்து you take a report from the system and say this is the inventory that I am supposed to have. The books will say tallyல இருந்து ஒரு inventory extract எடுக்கிறது, SAPல இருந்து ஒரு inventory extract எடுக்கிறது. You take out that inventory export and go outside onto the warehouse and then see this item number A, table number type 1 check, table type 2 check, table type 3 check, irka illaya. This is what is book to floor, where you get a report from the system and then do the verification. அதுல இருக்கிறது கேப்பீங்க, அவங்க காமிப்பாங்க, that you just note down as verified. That's all. That is book to floor. And then floor to book is you go with a pen and paper, note down everything that is there on the floor, and then come back and check with the books. You will then check what is accounted as inventory in the books. That is floor to book. Floor to book என்றது வந்து you take a pen and paper, go to the floor, note down everything, and then come back, prepare your own sheets, and then compare with the inventory that is there in the system. Then that is called book floor to book. What is book to floor? You take a report from the system, that is the accounting books, the tally, whatever it is, then go do the physical verification. You say, okay, this table fan, where is it? This what is that table, where is it? This AC, where is it? This laptop, where is it? That's how you do the verification. So what are the types of procedures they are doing? Observe everything and then inspect the inventory. Inspection could be you doing the count or for testing the quality. It could be either ways. It could be counting or quality. You just do the inspection on a sample basis only and perform test counts. So inspect and perform the test counts are basically you doing sample verifications. We don't have to do the entire verification. We just need to be physically present when they are doing the physical verification. And as an auditor, the most important thing that is required of you is you stand there and observe what they are doing, what the management has told them to do, what is expected of them, what are the procedures they are following, how are they taking note, how are they reconciling, how are they converting. All these things you just stand there and observe. Don't say anything at all. And then if you want, you do perform your own inspection, your own testing, and then when the final report is arrived, you can give your observations against it. Next, perform audit procedures over the entity's final inventory records to determine whether they accurately reflect actual inventory count results. So since you were there all along, they will also show you all the reports that they have prepared, the reconciliations they have prepared. Just a minute. Okay. So perform audit procedures over the entities' financial reports to determine whether they actually reflect. So you need to ensure that the reconciliation report that is prepared by them at the end, once they are done with the physical verification, what is the reconciliation between the book and the floor, the book versus floor reco, and then what are the adjustment entries that they have passed. Inventory adjustment entries are common in many of the industries. At the end of the month, there will be an inventory verification and inventory adjustment entries will be posted, and then the regular operations will start. So you carry out those checks with respect to the adjustment entries, with respect to the reconciliations, with respect to the physical inventory report that they have established. So you do all this verification so that your sufficient appropriate audit evidence that you are getting, one as the physical verification report, and then your own working papers when you were doing point number 3 and 4, and then your books of accounts, the adjustment entries, everything, the reconciliation statement, all that you're getting, this basically is becoming your sufficient appropriate audit evidence. These are the general procedures that they are suggesting. On top of this, they are suggesting some special procedures. What are they? First one, inventory counting conducted at a date other than the balance sheet date. That means if it is not 31st March. So other than 31st March, if you do, it basically becomes a date other than, at a date other than the balance sheet date. So in those cases, what do you do, Abhina? They are saying perform audit procedures to obtain audit evidence about whether changes in inventory, because let's say you are doing the inventory verification on mostly we can take a 1 month gap, April, let's say 14th April. So you are going and doing the physical verification process on 14, practically not possible, let's say 2nd April. So 2nd April. Now, when you are conducting the inventory count on 2nd April, there must be some stock on 31st March, right? But as per the financials, you have to report what is there as of 31st March. But when you are doing this verification on 2nd April of the year, then there has to be some reconciliation between these two dates, isn't it? So whether the changes in inventory between the count date and the date of financial statements, this is the count date, and then the date of financial statements are properly recorded. Are they properly recorded or not? Okay, you can just take a best example. Many of the entities close the operations only on in the first week of the next month. Okay, and it includes inventory verification. So let's say 31st March this year. When is it? 31st March is on a Thursday. So Thursday வந்து generally close பண்ண மாட்டாங்க because it is in the middle of the week. Okay, you will still have operations, you will still have people coming. So first is a Friday. Friday is still a working day, so they will not touch that also. 2nd April is a Saturday and 3rd April is a Sunday. Just imagine if they are doing so my assumption is perfectly fitting for 2022. Let's say so 2nd April is a Saturday, 31st March is a Thursday. You cannot stop the operations on a weekday, right? You can only carry out certain activities during the weekend so that your regular operations and sales does not get affected. So 2nd April 2022, when on Saturday they are doing the physical verification, at that time what happens is this 31st March is when you are supposed to report the books, but 2 days of operations you have carried out in spite of the month's closing. So when you are doing the verification on 2nd April, there must be some adjustments to those numbers. You are doing some verification as of 2nd April, but there might be purchases, there might be sales coming in on 1st April and 2nd April. So the entity should give those details and do a reconciliation to arrive back at the 31st March number. And you need to ensure that these things are all proper. So when there is a inventory counting conducted at a date other than the balance sheet date, that is generally in our case, Indian case, it is 31st March. If you take the Arab countries or if you take America, there it is Singapore, there it is Jan to December. So if there are some countries which are planning to come up with a flexible reporting period. So based on the entity's requirements, based on the industry requirements, they are trying to plan to come up with a flexible reporting period. So all of this basically currently in Indian scenario it is 31st March. So as on that date, if the inventory verification is not practical, here in our case in the 2022, this is falling on a Thursday. So it's not practical to stop things on a Thursday and just, start the verification. So it will waste the time and the sales also. So you carry it out on the upcoming Saturday or Sunday, which is in our case it is 2nd April. So the reconciliation between those 2 dates needs to be properly documented. The changes, and you need to perform the audit procedures and obtain audit evidence about those changes. Okay, next. Auditor unable to attend inventory count. In case it is not physically practically possible, make or observe some physical counts on an alternative date and perform audit procedures or on intervening transactions. So they are saying if it is not practical to attend the inventory counting on that particular date, then you do it on an alternate date. You just attend you just go to the warehouse, you just go down on on any other alternative date and just do some sample verification. Okay, just some sample verification to see some high value items, that ABC analysis. You can break the inventory into ABC, and A is high value items but less in quantity, B is mid value items and medium in quantity, C is low value items but high in quantity. So all these three you split and do some sample verification. Do some sample verification and perform audit procedures or on intervening transactions. Again, intervening means the transactions that happen between the reporting date and the date that is today. So based on the physical verification date, you just need to reconcile what are the sales, what are the purchases, what are the stock transfers, what are the stock sales. All of that you need to take into consideration. Scrap sales, all of that you take into consideration and arrive at the current quantity. Do that reconciliation. Next, attendance at inventory count is impracticable. Here it is practical, but you could not attend. This is the scenario. But here they are saying it is impractical. Then what to do? Perform alternative audit procedures to obtain sufficient appropriate audit evidence regarding existence and condition of inventory. Okay. If it is not possible to do so, modify the opinion in the auditor's report in accordance with SA 705. Okay, let's come to this later on. First, let us look at this. If the audit attendance at inventory count is impracticable, see that is, if they are able to do the inventory counting, you should be able to be at that location, isn't it? That is the common thing. If they are able to go, we should be able to go as well. Maybe as auditors, we may not be used to those harsh conditions. So we just need to take our protective gear, whatever the industry safety equipments are, and then you just go stand there and just look at things. But when they are able to go, but you are not being allowed to, that is what you need to take into consideration. When the attendance is impracticable, either it is because of your condition or it is because of the entity which is not allowing you to go to that place, then you need to modify the opinion in the auditor's report. What is a modification of audit opinion, that we will discuss in SA 705. But for now, just remember that a general audit report that we all see is called as unmodified, unqualified opinion. That is the most common audit report where there is no deviations or where there is no significant observations from the auditor. It is called as unmodified, unqualified. So unmodified, if you are saying, it means it is normal. But if you are doing a modification to the opinion, it means the auditor is suggesting something, auditor is saying something about that particular item or about a certain activities or whatever it is. So here in this case, if you modify the opinion in the auditor's report, you will say that the inventory verification happened, but the auditor was not given access, or the auditor could not attend because of so and so reasons. So it was not practical. So for this year, we are reporting that the inventory number has been reported by the entity, but we could not be practically be present at that location. So either because of force or health or various other conditions. So these are some of the examples that could be there for the auditor not being able to attend, for it to become impracticable. I also told you natural calamities. So like I said, my friend was there counting and there was a snake that has come out of the pipes. So like this, there could be natural calamities or something, not practically possible to do certain things. So all these things you need to tell or communicate to the investors or the people reading the audit report that, boss, this has happened and this is the reason we are not able to give a true and fair opinion on this particular inventory at all. Next, inventory under custody and control of a third party. This is something that happens many of the times. Let's say, okay, let me give you two examples. Galvanizing and then molding and then intermediary process. Okay, let's take the example of steel industry. Steel rods get rusted, right? Steel rods get rusted. So when steel rods are getting rusted, they need to get a coat on them. The steel rods, some of the steel rods, the customers might request for a rust-proof coating. Okay, not all steel rods, because most of the times the steel rods go inside the cement. So they won't galvanize all the steel rods. Only some steel rods which they know will be physically exposed, or which they know will be lying outside for some time. They will say, please do the galvanization for this, or epoxy coating அப்படின்னு சொல்லுவாங்க. Epoxy coating or galvanizing, all these basically what they do is they stop it from getting rust. Okay, so various, not just steel, just think of any other industry. It could be aluminum industry, it could be copper industry, it could be any lead industry. All metals can corrode or rust. So when the corrosion happens, you need to do some activity called as galvanizing, or in the case of steel, it is called as epoxy coating. So when you do this, what happens is the rusting stops. Now, what happens here is the inventory will belong to an entity A. Okay, but they will not have the particular capacity or option to do these epoxy coatings or galvanizing. Okay, so they send it to entity B, where they do this. So the epoxy coating will be done by some other party. Now, what is happening here? The entity A is actually the owner of the inventory, but this inventory is being sent to the premises of entity B, where they will do the epoxy coating and give it back to the entity A. Or take another examples, any molding process. I have seen in one case where they entity A gets the raw material for the mold. That is some plastic, one kind of plastic. It will be a liquid plastic. Okay. So the entity A will get the plastic raw material, and then they will convert into a particular type of liquid, and they will send to the entity B, and then the entity B will make sheets out of it. That liquid plastic will be converted into sheets by the entity B. In that case, it is not practical by the entity A to invest on that conversion process, because it is not their regular operations. Okay, and these are very rarely required products. So this particular sheet conversion is done by some other person. So they just hire them and give them the work, and then be done with it. Now, just imagine in those cases when your inventory is lying at some other person's yard, some other person's location. Then if anything happens to that inventory, who is losing out? It is us who is obviously losing out on that, isn't it? In one of the cases I've seen in Bangalore, the company has sent some items for the molding, and what has happened, once we requested the other party to allow us to visit their place, so they gave the permission, and we went there. When we went there, we asked them to show where is the inventory of this particular organization. We are coming from organization A. Where is our inventory? Show me the location. So then he was showing, this is what is your thing, everything. But we were not very convinced, because the quantity that is looking there and the quantity that we had in the books, it was not matching up. So we started asking questions, going around the yard, and then finally what we realized is they don't differentiate between the quantity given by entity A or entity D, entity Z. Whatever the companies give, they will just take that and they will just keep it in their inventory. So even if there is a quality difference, it does not matter to them. You are giving one product, raw material. The raw material, even that liquid plastic will have raw material grades. There are grades to that liquid plastic. So irrespective of the grade that is given by you, they will just combine it everywhere at one place, and then they will do the production. So this the entity A was not aware of. So we discussed about this with the entity A, and then they said, no, ideally they're not supposed to do that because the quality issues happen. So the quality that we produce and the quality that some other people produce will be dissimilar. So he may even be making money by talking to the low quality producers and saying, see, just give me the material, you will get a product at a higher quality because other companies are producing it at high quality, we'll just mix the products together, you give me some commission அப்படின்னு இந்த மாதிரி arrangements எல்லாம் இருக்கலாம். So they don't have a specific demarcation process. Now think of it from the entity B's perspective. Sometimes, even genuinely also, it is not practical to demarcate and keep it separately. Okay, it's not practical, really not practical, because one is storage waste will happen. Warehouse வந்து அந்த entity wise split பண்ணா it will be a big headache for all the people. It will be not practical also to carry out ஒரு 5 ton ப்ராசஸ் ஒரு வாட்டி, ஒரு 50 ton ப்ராசஸ் ஒரு வாட்டி, ஒரு 6 ton ப்ராசஸ் ஒரு வாட்டி, இந்த மாதிரி ஸ்பிளிட் பண்ணி பண்றது சம்டைம்ஸ் இட் இஸ் நாட் ப்ராக்டிக்கல் based on the inventory or based on the process involved. So you cannot sometimes deal with small quantities, so you have to mix and give the output. So when we gave this observation, the company also said the same thing. The observation from a reporting perspective, it says that the quality that we are giving and the quality that other vendors or the other suppliers are giving, it may be low, and there might be a lower quality product that we are receiving back. Yes, that is practical, but the quantity that we are giving them is actually very low. Okay, they are dealing it within 10 tons, 15 tons. Okay, that is very low for that particular third party to do any activity on that. So when it is in a lower quantity, it is not practical for them to carry out a separate process, separate demarcation process. So as an industry standard, we accept this. The inventory gave the response, the entity gave the response. But otherwise, just imagine if this is happening, you are the one at a loss, isn't it? This happens in other entities also, other organizations also, where the split is compulsorily required. In case of steel rods, the epoxy coating, there you cannot mix it, because the epoxy coating is, you can do it in single small batches also, you can do it in big batches also. So there it should not be much of a problem in separation. But other areas, when you are not practically able to do that, that you need to do the reporting also. So inventory under custody and control of a third party, in those cases, you request confirmation from the third party that the inventory is actually there with them. You ask them how much inventory is there with you, how much is under production, how much is completed, what is the quantity exactly with you. So the third party will give a confirmation for that and perform inspection and or other audit procedure. So if they allow, if the third party allows you to visit, then you can go and do the physical verification also. So that is with respect to the inventory. These are the general procedures that are suggested with respect to inventory, and these are the special procedures that are suggested with respect to the inventory. A very small thing like inventory has so much of special consideration that a new standard had to be created just to make people aware that these are the things that can happen, so you be careful about it. And ICA has to take so much of precautions because inventory is like the lifeline of the organization. If the very inventory does not exist, then there should be a question on the entity's operations, the entity's financials, the going concern. The existence of an asset is not there. Obviously, you should start questioning. That is why this much detailed suggestions by ICA. Now, what has happened? Okay, now let us go to the next part of it, which is litigation and claim. When you're talking about litigations, what are they? Litigations are basically legal instances. You are in some legal fuddle. Now, the most important aspect over there is the assertion called completeness. What does completeness mean? Whether all amounts that are required to be recorded are recorded or not. Whether the amount that is required to be recorded is recorded or not. When you are talking about completeness, you need to take into consideration all the possibilities, all the practical issues, all the practical considerations, and then arrive at the provision amount or disclosure amount that needs to be there in the financial statements. Either it has to be a provision or it has to be a disclosure. So, as an auditor, when you are doing the verification of that, if they have taken a provision or if they have given a disclaimer, or if they have not given a disclaimer also, you need to obtain audit evidence as to why they have not given the disclaimer, why they did not give feel it is material, why they did not give this in the financial statements, why they have reported this in the financial statements. So for all of that we need to obtain the audit evidence, isn't it? So they are giving certain things. So auditor is required to identify litigation and claims by the following procedures. First you identify inquiry of management and others within entity, including the in-house legal counsel. In-house legal counsel, you need to talk to them. You sit with them, talk to them. First thing is inquiry. You sit with them and talk to them as to what are the legal cases the entity is facing. What exactly are the issues the organization is facing? All of this you discuss with them. Okay. And then you will know what are the major legal cases that the entity has. Then review the minutes of meeting of those charged with governance and communication between entity and external legal counsel. So those charged with governance, if there is any legal committee, if there is any litigations committee, if there is any compliance committee, those people might be, discussing all these things, right? So if you are reviewing the minutes of meeting of those committees, let's say legal committee, let's say there is a legal committee. So if you review the minutes of meeting of the legal committee, then you will know that okay, boss, these were the cases that was discussed by this committee. So you can be very confident that these are the actual cases that are there in the organization because it becomes a standard proof. At the committee level, they are discussing means these are the material things that the cases that the entity feels is material for them. Then communication between the entity and the external legal counsel. Again, when the legal committee is involved, obviously they will also hire one external legal counsel to fight for them in the court of law. You can take some, say, famous prominent lawyers. They will be hired by L&T, Reliance, and all the internal counsel will be in-house employees. They will give one initial legal analysis. They will do the backup documentation, everything that is required. And the external legal counsel, someone like a famous lawyer or someone who is affordable, they will be given all these documents by the internal lawyers. So these lawyers and those lawyers, in-house and outside, lawyers will communicate and do the documentation, case filing, everything. Next, review the legal expenses account. So these are the areas from where you can get the details of the legal litigations and claims is what they are suggesting. So first thing is inquiry. You just talk to people, get an understanding, and you will have these things in place. Second thing is check the legal committee minutes of meeting. That is those charged with governance. In case of legal, it should be a legal committee, or you could think of a compliance committee, or you could think of a quality committee where these things are discussed. So, or you can think of anything like a HR committee or a harassment committee, so where these legal instances are discussed. So those minutes of meeting, if you do the verification, then you will know that these are the legal issues that are being faced by the organization. So you can make a note of them and you can discuss about them. And then you can have the communication between the entity and the external legal counsel. So what are the correspondences that were made between the entity and the external party, legal party? So then you know what cases were discussed, what is the status of them, what are the outcomes of the case, whether there is a provision required, whether there is a settlement required, whether there is a receipt that is going to come in, or what exactly is the exact scenario of that, and whether this requires any disclosures in the financial statements. All of that analysis you can do based on these reviews. And the final thing that can always guide you is the legal expenses account. So if you make a payment, definitely you can ask as to what exactly were the services provided by the legal party for you to record these expenses. So these are some basic indicators that the standard is giving you and saying, with respect to the legal cases, this is what, if you do the minimum, bare minimum, this is what you need to do to ensure that the not just the amount but also the disclosures are appropriate, are true and fair. Next, if management refuses to permit auditor to communicate with legal counsel, or external legal counsel refuses, or let's break this, external legal counsel refuses, or auditor is unable to collect sufficient appropriate audit evidence by performing alternative procedures, then they are saying modify the opinion. Say that was either they did not permit me, or the external legal counsel is refusing to talk to me, or we are not able to obtain enough data to give a comment on this. So based on what exactly is the event that is happening over there, you need to give a comment or opinion accordingly. Okay. So that is with respect to the litigation and claims. And the last part, we have segment reporting, presentation and disclosures is what is important over here. Whether entity or whether operating segment needs to be reported or not will be coming from the accounting standards. The guidance is all coming from accounting standards with respect to this. But as an auditor, you need to look at the accounting standards as well as certain things in determining what exactly needs to be reported. Whether it is qualifying for being reported as a segment. Second, if it is qualifying, what should be reported and what may not be reported. So here, obtain sufficient appropriate audit evidence regarding presentation and disclosure of segment information in accordance with the applicable financial reporting framework. That is basically your standards. Ind AS or accounting standards. That basically is your financial reporting framework. The financial, the audit reporting framework அப்படின்னா நம்மளுக்கு வந்து ஐசிஏ கொடுக்கிற இந்த standards on auditing, standards on internal audit, standards on assurance engagement, all these standards form part of the auditing reporting framework, audit reporting framework. But when it comes to the financial reporting framework, it is all coming from the accounting standards. So either Ind AS or accounting standards, IFRS. IFRS is not applicable for us, but Ind AS is what is the guidelines, or for small scale entities, you can apply accounting standards. So what exactly is expected out of us? First, obtain an understanding of the methods used by management in determining segment information. How are they considering it as a segment? How are they not considering it as a segment? All those information you obtain, and do what? Evaluate whether such methods are likely to result in disclosure in accordance with the applicable financial reporting framework. The segment information, there is segment reporting, there is one separate standard both in Ind AS as well as AS. So whether the disclosure requirements are in line with that accounting standard or not is the first thing that you need to check. And where appropriate, testing the application of such methods. So if they say whatever is generating more than 2% of their revenue, that is what the management wants to take into place. Okay, let's say 20% of the revenue. Now 20% will be very high. Let's take 5%. So any product, Nestle, if you actually see the number of products by Nestle is not small. It's like an ocean. Let me check Nestle products. Okay, if you do a simple Google search, you will come across a whole list of items that you wouldn't have thought were belonging to Nestle. So let's check this. Nestle products, if you see, would you even expect that L'Oreal products are belonging to Nestle? And then they have blocked this one. Okay. So you wouldn't ideally believe that L'Oreal is a product for coming from them. And then there are milky things that are there for the kids. And then you have Ralph Lauren, Diesel, Armani, all these are perfumes that are there. And then these are for the dogs and cats. Okay. And these are these ice creams, all that. What is that? The other one? It's called as, I'm not getting the name, but it is similar to ice cream. Sundays. And then these are basically your chocolates, and then you have Kit Kat, Crunchy. All these things are basically your chocolates. These are those similar to chocolates. You have smaller things like gems mari irukum idella. and then you have the coffee, and then all these things. So single Nestle has so many segments. Okay. And these things are basically what determine the segment reporting. And these are not actually all the segments. These are only those segments which are giving us significant revenue for Nestle. Okay. So when the significant revenue is coming, these things need to be reported. Just imagine here it says that L'Oreal alone is getting 30% of the revenue for Nestle. Just these beauty products, the perfumes and beauty products alone are generating 30% of the revenue for Nestle Group. Okay. So these things, if it is a significant revenue generating segment, then they need to do that reporting. Even Maggie is part of Nestle only. So when Maggie went into legal cases in India, Nestle India and even the parent company, Nestle UK, they both had to report saying the Maggie product is currently facing some legal issues in India. So because of that, we may see a lowered revenue for some years or whatever that they have written at that point of time. They had to give that disclosure. So as an auditor, we need to see what what is required to be presented, what is required to be disclosed, and whether the disclosure is in line with the financial reporting framework or not. That is one of the first thing. And then second thing is test the methods that the management has employed. If they say all 5% revenue generating sources, all 5 percentage, all segments that are earning more than 5 percentage, we will take them into consideration and we will report them as operating segments. அப்படின்னு அவங்க சொன்னா, as an auditor, based on the financials, you need to do your own analysis and see whether all these segments that are forming, giving more than 5 percentage revenue are being reported or not. We need to make one analysis. And finally, performing analytical procedures or other audit procedures appropriate in the circumstances. So wherever required, you do your own analytical analysis and see if it is required to be considered. Let's say revenue it is not significant, but in terms of assets, if it is significant, still it has to be reported, because even though it is not generating revenue, it is holding the majority of your assets. It is holding a significant portion of your assets. Then you still need to do that reporting and say, boss, this is still a significant asset for you. This is still a significant segment for you. So the analytical procedures could be with respect to the other things also, like equity or assets, or why is the screen sharing stopped? Okay, so it could be with respect to equity, it could be with respect to liabilities, it could be with respect to the assets, it could be with respect to the bank balances, it could be with respect to any of the financial statement items. So based on that, you need to assess whether it is required to be reported or not. So once you establish whether that requirement is there or not, you just need to see whether it is in line with the financial reporting framework, that is the Ind AS, or not. So that is all with respect to SA 501. So we will stop the class here for today, and we'll continue tomorrow. I will update the time, so hopefully I can start early tomorrow. Okay, so that's all for today, guys. Thank you.
Thank you, sir.